Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Market-wise, let's take a look at it out here. We have the Dow Industrials down 27, NASDAQ up 3, S&Ps are flat. Gold contract, check this out, folks. It's up 27, but from highs to lows, you're talking about in this gold contract, it was about as good as you can get. You're talking about wide price spread, accelerated volume, all the above, 1146 to 1192. We get the price, we get spread, we get it all. Bottom line, and we'll get our heads wrapped around that. Let's go right over King Dollar right now. King Dollar, folks, that's it. That's it with King Dollar. King Dollar got up, tested the highs, did 53,000 contracts, got to a price point today of 88.36, gave it up. We've had a price spread in King Dollar of 913 ticks. What that leads into at this point, we'll see what kind of retracement we get. I expect we're going to see a normal retracement will bring it down to 83.99. 83.99 off of 87.66 is going to basically put selling in the S&P. It's going to put buying in the commodity market. We go to the silver contract. Silver finally had a sign of strength out here. What silver did, silver goes from a price point of 15.25 up to 16.30. Big number, no doubt. Has the juice behind the move. Right, on silver, the difference with silver and gold is we want to see silver take one more leg up. You take one more leg up like you did today, then silver would be heading for the $21 level, which no doubt is a big number. Bond market, we take a look at bonds. What we have with bonds, bonds just refuse to back down, folks. The 10-year out here is at 126.21, and the setup is really sweet. And this is why the setup's so sweet. We did 1 million contracts out here today. And that's not a huge amount of contracts. The 10 years can do 2 million, 1.4, 1.5 real easy. But what we have is this. When we went up on the 7th of November, we got to a price point of 126.24. We did that with 1.6 million contracts. Next day, we did only 900,000. Gave it up. But when we came back with anemic volume. We never even got to the swing low, which is 125.727. Then what ends up happening, we're pushing into the swing now with volume. And this is where this gets really intriguing, and this is what it is. So the November 7th high is 125.27. You get into that, and then your next stop is going to be the lows of the highs of September 15th, and that's where this baby wants to go, which is the 130.17 mark. Higher prices in the bond market, lower yields are coming at us. 30-year, same setup. We did 247,000 contracts out here. We're at 141.20. That swing up there that's going after is 141.31. That's going to do it in a heartbeat. And then what you're going to see is that once you get into the thing that's amazing about the 30 leads this thing. You get into 142.13. That's the low of the high. That thing's just going to move. Okay, King Dollar. Let's get over to King Dollar. So King Dollar this morning, folks, 0730. It's running into its swing high from last week. Dramatically lighter volume. At 0730, we had 17,000 contracts. So as it was getting over there, it was really sweet. Why? Because absolutely zero contracts early in the morning. Oh, sorry, folks. Excuse me. Bottom line is that it gave it up in spades, came down with volume. I suspect what we have now is that you're going to see King Dollar go lower, commodities go higher, and let's go over to the oil market. So CLZ4. Oil, ABC structure down to the $70 area. We made it to 73, I think. Okay, so oil, where is she? Okay, so oil, here we go. Oil out here today, we got to 73.22. I suspect that's probably it. Why? We did 130,000 contracts. You get under the low, had lighter volume. Oil's down from 101. You know, that's a big number. That's 25%, folks. It's straight down, by the way. what you'll see now is that now you're going to see a good counter-trend bounce going. Now, this is where it's going to get really intriguing because the counter-trend bounce and oil can get you up to 84 in about a heartbeat. Commodity-wise out here, what you have percentage is this. Silver was up, is up 4.4%. Gold's up 2.4. Crude's up 2.4. You get gasoline up 2.1. It's a shame, I know, at the gasoline. Gasoline that did get under $2 today. It was a $1.99 wholesale. Bottom line, you know, we'll see where this shakes out. S&Ps. Now, let's go to the SPY. So we have with the SPY is this. SPY right now, 204.55. 5 days we've been in the exact same spot here. We'll see where this baby can close out for the week. The 203.59, which looks like we're going to be above, that'll be another week lighter volume. If you want to see the characteristic, it's pretty intense. Meaning, so your swing point is 201.89 on a weekly basis, 561 million shares. We came up to the swing the week of the 31st with 592 million. That was 3 weeks ago. Last week we did 475 million, and this week we are at 348. So you can see the correlation. Higher you get, in this case, tiny bits higher, and the volume is dropping off beyond belief. That is distribution at highs, folks. That's how this baby's set up. If you've been listening to the financial press, it's about as good as you can get. And what I mean specifically by that is that you're hearing the word safe on a continual basis. It's pretty amazing. When I was out for about a half hour, I was coming back to the office, and they were doing it was a technical guy, which is really weird, on Brian Sullivan's show. And what he said is that, oh yeah, it's safe to be in the market right now. I said, oh, this is really interesting. Safe. Listen, the markets go up and down. You know, last 5 years have only gone up. There's no such thing as being safe in the marketplace, folks, okay? That word in particular, when you hear that word, you hear that word at highs when everyone kicks back, grooves. Hey, it's safe. Everything's cool. Yeah, right? Really? 877-927-6648. Let's go take a look at the XAU, the HUI. XAU, HUI, bottom line is that these things are going, folks. They've tested, retested, got into the lows, shook everyone out. Bottom line, they want to go topside now. XAU up 384 at 70.55. HUI, we go take a look at the HUI. HUI up $8 at 166.54. In both cases, what you're going to see is that you tested lows, did it with lighter volume, rejected lower price. And the lower price that we rejected in both cases, folks, was the lows of 2008. And the HUI, that number is 150.27. It made it down to 146.01. Lighter volume. The XAU, we take a look at the XAU. What you have with the XAU, the low of 2008 and the XAU, 63.52. We made it down to 61.39. Lighter volume, rejected it. The hardest part to believe is that they actually came all the way back to the 2008 lows and whacked those babies. And if you want to take a look at one that that was giving the biggest signal, and I know if you've only been to a couple of my workshops, it was absolutely blowing my mind that an Eagle had a high volume low at $20.87. Then it went all the way up to $88. Well, it got back to $22. You know, never made the low, had lighter volume. We just tested that this month. That's going to be lighter volume. Now she's getting a sign of strength. She's going to be out of here. Bottom line, you get high volume lows out there, high volume highs. Keep your eye on them, folks, because they're going to get tested. Some of the Dow stocks. We take a look at some of the Dow stocks. American Express is down 63. Oh, let's go to the IBB. The IBB is screaming, folks. It's screaming that it's going south. Wide price spread, accelerated volume, breaking a swing point with volume. 1.7 million shares today. It's blowing away the 286 at 1.3 million. This thing's going south. What is that the heads up for? That's a heads up almost a year ago, February. The IBB was what led the NASDAQ lower. This is Tom O'Brien. This is TFNN. Dow right now is down 30. Nasdaq's up 2. S&Ps are off. They're flat. We're going to be right back.